You're probably thinking Wall Street is the place where fortunes are made. But here's the truth. The smartest investors in the world are already shifting their money and their base of operations to a place that 10 years ago barely made the radar. Dubai, a tax haven with zero capital gains, ultra-modern infrastructure, and booming sectors in finance, crypto, real estate, and even AI. And at the end of this video, you'll understand exactly why major hedge funds and tech millionaires are turning their backs on New York and London and betting big on the Gulf. This is not a trend. It's a tectonic shift in how and where wealth is built and preserved. Back in 2022, when Bridgewater's former co-CEO Bob Prince visited the UAE for the first time in years, his comments were subtle but telling. There's a lot happening here that people aren't paying attention to. Now, just a few years later, Dubai is quietly attracting a new kind of elite. Not just oil tycoons and royalty, but Silicon Valley entrepreneurs, crypto whales, and European family offices looking to escape the grip of overregulation. So what exactly is driving this exodus? Let's start with the obvious, taxation. In the US, capital gains can hit 20%, state income taxes can pile another 10%, and corporate tax sits around 21%. In Dubai, capital gains 0%, personal income tax 0%, and corporate tax is only 9%, introduced just recently in 2023, still among the lowest globally. But this is not just about tax arbitrage. It's about sovereignty, the ability to operate in a system that doesn't punish success. Where regulation is light, banking is fast, and access to capital is global. Let's look at real estate. While office towers in New York still struggle with post-COVID vacancies, Dubai's commercial market is booming. In 2024, Knight Frank reported that premium office rents in Dubai rose by over 20%, the fastest rate among global financial hubs. That growth is fueled not only by demand, but by a surge in company registrations, particularly in DIFC, the Dubai International Financial Center, which now hosts over 5,500 companies, including Goldman Sachs, JP Morgan, and over 100 hedge funds. The appeal isn't just economic, it's lifestyle. Imagine working from a waterfront office with no commute, no freezing winters, and access to world-class services, from private healthcare to Michelin-starred restaurants, all within 15 minutes. Dubai has engineered itself to be frictionless, a city as a service, tailored for the ultra-productive and ultra-wealthy. And the Emirate has one huge advantage that the West doesn't: speed. In 2023, a license to launch a financial firm in Dubai could be issued in just 5 days. Compare that to the bureaucratic loops in New York or London. Months of red tape, audits, waiting. This is why venture capital firms like Beco Capital and even decentralized finance platforms like Binance have made Dubai their HQs or regulatory hubs. There's also a strategic reason: geopolitical positioning. Dubai sits at the crossroads of East and West. It's a flight away from London, Mumbai, Singapore, and Nairobi, making it a natural bridge between emerging markets and old money. This gives investors access to frontier markets with higher growth potential, without losing access to the developed world. At this point, you might be wondering, is this just hype or a real shift? Consider this. Between 2020 and 2024, over 4,000 millionaires moved to the UAE, according to Henley and Partners. Not just because of taxes, but because of certainty. When global markets swing wildly and Western politics turns hostile toward the rich, Dubai offers a kind of stability that money respects. And this wave is still early. Stick around, because by the end of this video, I'll show you what sectors are attracting the most capital, and how average investors are getting in before the next boom hits. But this isn't just a story of wealthy individuals seeking a luxurious life under the sun. It's a calculated move by institutional capital, hedge funds, private equity firms, and tech companies to position themselves where the financial environment is built to scale. And Dubai is building the infrastructure to receive them. Take the DIFC Innovation Hub. This isn't just a cluster of startups. It's a $1 billion initiative designed to attract over 1,000 tech and fintech firms by 2025. And it's working. Stripe opened its MENA operations there. Crypto.com, eToro, and Revolut received regulatory approval through the Dubai Virtual Asset Regulatory Authority, VERA, which was created in 2022 specifically to provide a framework for digital asset firms, the first of its kind globally. In fact, while Washington and Brussels still debate how to regulate crypto, Dubai has already created an environment where the rules are clear, innovation is encouraged, and capital feels safe. That's why crypto VC funding in the UAE surged past $600 million in 2023, more than many European countries. But Dubai isn't betting everything on crypto. There's an aggressive push into AI and tech infrastructure. In 2024, the UAE launched its national AI strategy with the goal of becoming the global hub for artificial intelligence by 2031. The plan? Massive government support for AI startups, integration of AI in logistics and finance, and attracting foreign talent through simplified visa programs. This is crucial because smart money doesn't just follow low taxes. It follows ecosystems. Talent, regulation, capital, infrastructure. And in all four, Dubai is checking every box faster than the West can respond. But let's talk real estate again. This time from an investment perspective. While traditional investors are still pouring money into saturated U.S. markets like Miami or Austin, those in the know are scooping up beachfront properties in Dubai's Palm Jumeirah downtown and even new developments like Dubai Creek Harbor. The reason? Double-digit rental yields, often between 7% and 10% net, in a market with strong expat demand and limited prime supply. Compare that to the 3 to 4% yields in most Western cities before taxes and regulation. And it's not just residential. Commercial properties, data centers, and logistics hubs are becoming hotspots for institutional investors. Blackstone, Brookfield, and other global giants have been steadily increasing their Gulf exposure, often through joint ventures with sovereign wealth funds like Mubadala or ADQ. This model, public-private partnership with clear governance and access to capital, is something Western economies are trying to emulate, but can't replicate quickly. Why? Because Dubai has centralized decision-making. When a regulation needs to change, it does, sometimes overnight. No Congress, no 5-year bureaucratic review. Just implementation. And that's exactly why it's attracting not only investors, but builders. If you're an entrepreneur, Dubai isn't just tax-friendly, it's pro-growth. You can register a company in days, hire talent from anywhere with golden visas, and access government-backed funding if you're in the right sectors. AI, fintech, green energy, logistics, and healthcare are booming, with double-digit CAGR expected in the next 5 years. Here's what that means for smart money. Not only is capital migrating, but innovation itself is shifting geographies. And history shows us that innovation always pulls wealth with it. Just look at what happened with Silicon Valley. In the 80s, it wasn't just about better weather than New York. It was about a new operating system for money and ideas. That's what Dubai is doing now, re-engineering the environment where capital lives, scales, and reinvests. And we haven't even talked about sovereign wealth yet. Because once you understand what's happening with the UAE's $1 trillion in state-managed assets, you'll realize that Dubai isn't just a playground for the rich. It's becoming one of the engines of global finance. And that changes everything. Stay with me, because in the next part, we're diving into how the UAE is deploying that capital strategically to shape the next financial world order. And how you can position yourself before the rest of the world catches on. Let's talk about sovereign wealth, because this is the silent force reshaping global capital flows. The UAE isn't just attracting private money, it controls public capital at a scale that rivals some of the world's biggest economies. The country's two major sovereign wealth funds, Abu Dhabi Investment Authority, ADIA, and Mubadala, manage over $1.5 trillion combined. But what's more important than the size is how they use it. These funds don't just buy bonds and blue-chip stocks. They act like strategic investors in Wanya, acquiring stakes in tech, infrastructure, renewables, logistics, and even healthcare across the world. In 2023 alone, Mubadala invested in quantum computing firms in Europe, battery supply chains in Asia, and health tech platforms in the US. And where do they manage much of this activity? From Dubai. Why? Because Dubai is no longer just a trade hub, it's a capital allocator. A place where public and private wealth intersect, collaborate, and multiply. And this matters because when government wealth funds are aligned with private investors, it creates a stable, long-term ecosystem. Not the short-term pump and dump logic that defines much of Western markets today. This is exactly why family offices, especially from Europe and Asia, are relocating to Dubai. According to Campton Wealth, over 60% of newly formed family offices in 2023 in the EMEA region were based in the UAE. They're not just escaping taxes. They're looking for alignment with long-term capital, protection from unstable politics, and access to high-growth emerging markets. Now here's where things get interesting for the rest of us. This movement isn't just top-down. A growing number of retail investors, freelancers, and digital entrepreneurs are moving their residency, or at least diversifying their exposure, to Dubai. Remote workers and creators are applying for golden visas. Crypto investors are setting up offshore companies in free zones to reduce regulatory risk. And fintechs are onboarding clients globally from a base that's cheaper, faster, and friendlier than traditional Western cities. In other words, Dubai isn't just for billionaires. It's for builders, scalers, and anyone who understands that where you live, bank, and operate has a compounding effect on your wealth. So, what does this mean for you? If you're an investor, look at the funds and companies pouring into Dubai-based infrastructure, fintech, and AI platforms. If you're an entrepreneur, research the visa options and free zone setups. And if you're simply managing your money, ask yourself whether your current system is really working for you or against you. The West is not collapsing, but it is slowing down. Meanwhile, places like Dubai are accelerating, not just economically, but structurally. And as Ray Dalio often says, when the world changes, you either adapt or fall behind. So if the smart money is moving to Dubai, maybe it's time to ask why you're still stuck in the old game. If you got value from this breakdown, hit the like button so we can keep making content like this. And subscribe if you want to be ahead of the next big financial shift. Let me know in the comments if you want a deep dive into how to invest in Dubai's booming sectors, or even how to set up your own company there. The sooner you start, the sooner you grow wealth.